Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and today what we're going to talk about is the most recent statistics for consumer and corporate bankruptcies. And I'm going to tell you guys right now, the trajectory of bankruptcies is increasing. So we'll go over that data. Now, historically, we may not have as many bankruptcies as the GFC, but what I'm trying to constantly tell people is what really matters is the trajectory of things. Where are we headed? How bad are things really? Are things going to get worse or are things going to get better? Every single data source that we look at right now is suggesting that things are only going to get worse. And so I don't want you to get wrapped up in bankruptcy. I myself, and I mean, it is embarrassing, but I had a bankruptcy myself. And if you think that by filing bankruptcy, you could just walk away from debt, well, yeah, that's a little bit true. But you guys, it affected me for 9 years in my personal situation after I had the bankruptcy. I got penalized. It was hard for me to get financing. In fact, I couldn't get financing. I couldn't even buy a home, and any financing that I could get, massive down payment, super high interest rate. Having a bankruptcy may sound like, it's not a big deal, but again, it's a horrible thing because they keep you in the gutter. And not only that, the depression from being a loser, from losing everything, and the fact that you got to climb a huge mountain all over again. Are you kidding me? You guys, that sucks. So I don't want it to happen to you. So no matter where we go in the story, I want you guys to understand it is not too late to make changes to get ahead in the future, but it does take action. And I will say this, okay? After all the years of doing this, all the thousands of consumers I helped, best advice I can give you is just do it. Now we're going to start with uscourts.gov. Okay, now this was recently published at the end of April. Bankruptcies rise 16% year over year, and that's all categories of bankruptcy on the rise. Bankruptcy filings rose 16% during the 12-month period ending March 31st of 2024. That is a similar rate of acceleration as December 31st of 2023's quarterly report, but new bankruptcy cases remain significantly lower than before the start of the coronavirus pandemic. Now, it's important to understand that because a lot of people get lost on the data. They say because we're not at GFC levels or in certain data, not at pre-COVID levels, that we're okay. But what I am trying to point out to people is, again, the trajectory. Where are we headed? Are things getting worse or are things getting better? And as far as bankruptcies are getting worse. And that's not just consumers. This is business and non-business bankruptcies. Now, the difficult thing here, you guys, it's also including 2020, and that's right out of lockdown. So the hard part is the COVID data skews all of this because we were in lockdown and legit people, didn't have jobs. So it's hard to take 2020 into consideration and even 2021 because that was right outside of it. So you kind of want to look at 2022, but regardless, 2020 data is here. And looking at 2022, you can see, again, business bankruptcies all going up. The trajectory is going up probably 100% because quantitative tightening. Interest rates are higher. But as far as non-businesses, consumer and citizen bankruptcies, looking at 2022, you can even compare 2021. We're almost at the levels of 2021, which again is right outside the lockdowns. But for the last 3 years, the trajectory is alarming. You guys, it's shooting up. Now, when we look at the different types of bankruptcies, 7, 11, and 13, and 12. So consumer and citizen bankruptcies are the 7 and 13, okay? The 13, Chapter 13 bankruptcy basically allows you as a citizen to file bankruptcy protection and keep your house, but you have to pay back some of the debt. The Chapter 7 allows you as a citizen to walk away from your debt. But if you have any assets, generally the court will make you use those assets to pay back to the creditors. That's why a 13 is generally a homeowner bankruptcy. And when you look at the homeowner bankruptcy, it's really astonishing. It's actually exceeding 2021. And that would suggest, again, skyrocketing property taxes, homeowners insurance, and just, overall debt to begin with. But look at guys. Right outside of COVID, right outside those lockdowns, it was only 119. That went to 125 and then 166 and then 187. The trajectory of homeowner bankruptcies, or rather Chapter 13 bankruptcies, which is in lieu also of foreclosure. Okay, so you're saying foreclosure data in here as well. This will prevent foreclosure. It's all skyrocketing upward. And also the same with the chapter 11. These are businesses. Okay, so businesses are suffering. Okay, you see that. It was 7,800 right outside of COVID. Then it went down to 43 and then 53 and then skyrocketed. You guys absolutely skyrocketed. I mean, is anyone seeing this trajectory here? The trajectory is insane. I'll show you more data. Now, when it comes to 7, you can see that's lower than 2021. So in 2021, chapter 7, which is a consumer walking away from everything, was 345. It's now 271. So although it's gone up the last 3 years, the trajectory is going up. It's not higher than 2021. Yet, chapter 13 bankruptcies are. Why? Why are chapter 13 bankruptcies surging, but yet chapter 7 are not surging as much? Again, if we go back to 2021, the reason is because of home ownership. Home ownership right now is incredibly expensive. And even if you purchased in 2020, 2021, what are you going to do with all the equity? Yeah, you're sitting on equity. That's good. You're sitting on 2 and 3% interest rates, but aren't you locked out of the housing market as well? Even if you're not tapping the equity, you're still paying money on it in the form of property taxes and homeowners insurance. What we see there is we see homeowners getting ravaged. That's what you see in that data. Now, going back to corporate bankruptcies, I want to visualize this a little bit differently because I really want us to respect and appreciate where we're headed and how things are actually going to get worse. This is U.S. corporate bankruptcy filings, you guys. In 2023, that is a 13-year high. Okay, so we had 642. Last time we had that was in 2010, right outside of the great financial crisis. You guys, we know right now that America is bankrupt. And we also know that this data is lagging. So what are the real numbers here? It's much worse, you guys. It's much worse. And again, things are going to get worse before they get better. Look at some of these headlines that are coming out. I mean, bankruptcy is on so many people's minds right now. I mean, people are freaking out. They're like, oh my God, what do I do? I'm drowning in credit card debt. Should I go bankrupt? Think of that attitude if you're retired. Look at this headline. Is it better to die in debt or declare bankruptcy in retirement? Y'all, that's how bad things are right now. Did we have these headlines in 2019? I don't remember them in 2019. Do you? Things are real bad. If I'm retired and I'm reading an article, should I just die with debt or should I file bankruptcy? That's a little bit depressing. What do you guys think? I mean, this headline right here pretty much summed it up great. This was dropped about a week ago. Bankruptcies increase amid high interest rates, drying up pandemic stimulus money. The money's gone. The Fed already came out and said people spent all the excess savings. All we have now is the high prices and no income growth. You guys, America is bankrupt. And it's not just the consumer. Again, I would challenge you to come here. This is spglobal.com. It shows you the same thing, filing dates. But really what I wanted to show you guys, this hurts me. I mean, first of all, you can look at monthly. So these are all the companies that filed bankruptcy. I mean, some of this hurts, but I want to show you the biggest companies that went into bankruptcy in 2023. It's right here. And I want you guys to think about this. The first 2 companies are real estate companies. The very biggest bankruptcy was Pennsylvania Real Estate Investment Trust. That is the biggest bankruptcy of 2023. How is a real estate investment trust going bankrupt? That means the housing market is not resilient like people think it is. Again, high probability prices are going to go down unless income goes up because this isn't sustainable. Second, number 2 biggest bankruptcy of 2023, also a real estate company, WeWork Inc. The real estate industry is not. And we have data now. You're looking at data that shows how desperate existing homeowners are. The share of adjustable rate mortgages is only going to lead to a higher rate of bankruptcy. If people cannot afford to purchase a home with a fixed rate, usually odds are they shouldn't be buying. You guys, the blue represents the share of adjustable rate mortgages. And ever since quantitative tightening, so this is where quantitative tightening, right where I'm at right here. Ever since quantitative tightening, the share of adjustable rate mortgages has exploded. Over the last 8 years, especially, look at this, going back to 2018, the share was about 4 to 5%. It got real bad in 2022. We had 6 to 8%, and it's going up. Homeowners right now are getting desperate, which will lead to an increase in Chapter 13 bankruptcies. And maybe you're wondering why. Why the increase and why the surge in bankruptcies? Well, it's easy. It's because there's no income growth. It's because we can't afford it. We feel it right now. I'm losing money. It is so hard for me to save. I have so many additional expenses I didn't see coming. The taxes are different. I pay more taxes. It's harder to save. This is crazy. Look at this chart. This is home price growth, which is in blue, versus income growth by decade in black. Okay, this is decade. Look at the massive gap of income growth in the 2020s, and it's not even finished yet. We're not even halfway through the 2020s, and look at that blue line. And look at to the right of that, okay? This blue line right here, massive equity growth, exceeding the 2000s, exceeding 2010s. But look at the income growth. There was no income growth. So looking at the 1980s, yeah, we had 65% home growth, but that was accompanied by 70% income growth. The income growth exceeded the home growth. Do you see this? So anyone comparing, again, 70s and 80s, you can't. It's a different consumer. Again, 2020s, no income growth. But look at the prices of houses. Absolutely incredible. And that's why I keep saying, you guys, half of America is still confused, doesn't know what happened, doesn't care what's happening. Those are the people at biggest danger. Things are going to get much worse before they get better. And as home values decline, you will also see Chapter 7 bankruptcies go up, because in a consumer's mind that's losing everything, there's no point in doing a Chapter 13 if my home's upside down in value. Would you guys agree? Again, you're not going to file Chapter 13. Odds are you're going to file Chapter 7 if there's no point in you keeping your house. Look it, this is April. We've already had month-over-month price decline in April. We're not even done with spring yet. We already have price decline. Look at the major metro areas. This is going to accelerate bankruptcy. Number one, San Francisco's down month-over-month. Nashville, Birmingham, Alabama, Miami. Finally, in April, month-over-month decline. And then Los Angeles, it's going to be a lot of Texas. Houston, Texas. Dallas, Texas. Sacramento, California. Jacksonville, Florida. Tampa, Florida. Austin, Texas. Number one, San Antonio, Texas. Value's going down, y'all. And don't get blindsided. You guys to pay attention to is the indicator of recession. Unemployment is going to lead to bankruptcy. The trajectory of unemployment hasn't gone up in the last 14 years. In fact, generally the only time unemployment goes up is if we're headed into recession. And guess what, you guys? For the first time in about 14 years, unemployment is going up. And you can see again, unemployment went up here right into that recession. You see it right here again. Unemployment went up right into the recession. Unemployment goes up when we are headed into recession. And that is exactly what's happening right now. The trajectory is headed upward. And again, you guys, that's at the same time where people just can't make money. When we adjust for inflation, we have every category of adjusted for inflation income down. And that's my gripe. Because there's not enough income, bankruptcies are going to explode. You guys think bankruptcies are bad right now? I'm telling you, bankruptcies right now are going to be worse than the GFC. In fact, they're already almost there from a business standpoint. We already almost have bankruptcies worse than the GFC. We already have foreclosures worse in commercial real estate, but look at personal real income. It peaked in 2019. It's been down for 3 years. Okay. That's personal real income. When we look at median household income, again, peaked in 2019. That's gone down a lot, actually. That's been going down for 3 years straight. And it's not just household. Look at the family. Same thing, guys. Family peaked in 2019. It's been going down 3 years in a row. And so to me, as a consumer, like, what am I doing with all this information? How does it help me? Well, to me, what it does is it reassures me that I'm doing the right thing right now, because I'm not about to file bankruptcy. I'm not behind on credit cards. I'm still able to save money. I've been preparing for the last 2.5 years. I've been renting. I don't like renting, but it's the best thing for me to do right now. I've been preparing, disciplined, rebudgeting probably once every month. I feel like I'm always rebudgeting. I'm going to get ahead because I'm planning to get ahead. And that, my friends, is how you avoid having buyer's regret and having bankruptcy. But make no mistake, it's going to get really bad. And I don't want that to be you, okay? But if it is you, if you're struggling, remember Chapter 7, get with an attorney, you get to walk away from everything, but it still follows you, it still hurts. Chapter 13, you can still have the house, you got to pay back some of the bills. I really hope no one has to go through what I went through. And if you did, my heart goes out to you. You could still get ahead. Never give up hope. Now, other than that, guys, I have a free home buying course. If you want to learn more stuff, I have a whole bunch of stuff in the description. I really hope you're getting value. Let me know if you are. Give me a bonkers if you did. And other than that, if you guys are out there investing in real estate, you already know I wish you luck, and I hope you win.